For those of you who are new, my name is Margie Remmers-Davis, and I am the creator of the Fast and Easy Way to QuickBooks Online ProAdvisor certification. And we do a live stream every week in our Facebook group. Things have been a little crazy in my life. Some of you know that have been around. My mom got sick at the end of April. This is July 14th, by the way, while I'm recording this. My mom got sick at the end of April, and then she died in the middle of May. And so I have been I have been working with, her estate and her funeral and trying to manage, all of this stuff. And our weekly live streams have suffered, and I feel terrible about that. So I wanted to get back together with you guys as soon as I can. And so I am here, as you can see, in my hotel room. I'm in my grubbies, no makeup. This is just the real raw me, because as soon as we are done here, we're going to go back over to my mom's farmhouse, and we have a couple of loads more to the dump and then that's going to be it. Then we're going to say goodbye to Oregon, which is where I've been for the last couple of months dealing with all of this, and slowly head home back to Virginia, where my studio is and my office is. And I'm so excited to get back to normal and have this awesome time with you guys. So I have gone through, for my live streams, I have tried several different softwares, and they have always, the last couple of times I've tried to do it from Oregon, the upload speed was really terrible. And but I had Zoom calls, with my team, and the recording seemed to be, or the quality seemed to be fine. So I thought, well, maybe we'll use Zoom for the live stream. Hopefully you guys can tell me if I am. Of course, it also helps that I'm here in the hotel, and they have a little better internet than the last couple of places I've tried to hold the live streams. So let's go ahead and get started then. So in addition to have it being Zoom, I don't know why I decided to do this, but I'm going to do something a little different that I typically do not do on the live streams. And I'm going to go through a little presentation just to give you some background. So typically on these calls, well, actually, let me hop over. I'm going to share my screen right here. Share. I do know how to do that. All right. So let me just tell you a little bit, go back I do my little spiel each week about what this Facebook group is and what we do here. So the Facebook, and this is primarily, if you're on this call, you're already in the locker room. So this is great. This is primarily for the people who are going to watch the recording later on YouTube. But we have a Facebook group. It's called the QBO Gym Locker Room. And the purpose of the locker room is for us to discuss hands-on exercises in QuickBooks Online. So I have nearly 100 free exercises available for you, and it's all designed, everything that we do is designed to get you hands-on practice in QuickBooks Online. It's one thing to read a textbook or listen to a speaker. It's another thing to actually do it yourself hands-on. So the QBO Gym, if you're watching the recording, the link, of course, will be down below. And the locker room, you have access to nearly 100 exercises. Follow along in our weekly live streams, which is what we're doing now. And then we do regularly have, back when my life is normal, we have surveys so that you can, submit ideas, things that you want to practice hands-on. And then we create more exercises, and you can hop on these live streams. We'll go over them. So inside the locker room, now it does look a little bit different for me because I'm an administrator, but you'll notice that there is this featured section And then the first one in this featured section is this welcome post that it tells all about, what the group is and how it works. And then there is a link to, oops, don't want those emojis. There's a link to our free exercise spreadsheet. So when you click that link, it goes to a spreadsheet like this, and this is where you have access to nearly 100 exercises. I'm trying to see if I want to make sure you guys can, I don't know what you guys are seeing, but hopefully it's all good. You can see this. And most of these exercises come from our certification courses. So we help you learn what you need to know in order to get your ProAdvisor certification. And so most of these courses, like this right here, these are all of the exercises for the basic level course. These are the ones for the advanced level course. We have ProAdvisor challenges, which are the ones that are in your ProAdvisor account. Intuit has put together these challenges, but we have put them into our signature format so that you can, and we're still working on those, obviously, so that you can so they're a little bit easier to walk through than the way Intuit has them put together. And then we have some additional retired special requests. You'll notice all these ones that say Margie create. So that's my long to-do list of creating more hands-on exercises for you. All right. So a couple of weeks ago, we had somebody reached out to me and said that she wanted to learn more about inventory and asked if there were exercises for learning inventory. And I said, oh, yes, absolutely. In fact, the June issue of the QBO Gym is all focused on inventory. So what is the QBO Gym? Okay. So the QBO Gym is a different product that is not related to the certifications that we offer that gives you simulated experience of actually being a bookkeeper. So the difference between these exercises that you see here, these are just one-off exercises. It's just like one concept, and you learn there's a scenario and you learn that one thing. Okay. But the gym is designed for it's all encompassing as a month in the life of a bookkeeper. So you sit down and you are the bookkeeper for Craig, and it takes you all the way from when you first start working on his books that month until the end when you reconcile accounts and you provide reports and all of the stuff that goes in between. It's a monthly subscription. Of course, Joel can put that link in the chat. And then also, if you're watching the recording, it'll be down below. But anyway, so that's what the QBO Gym is. These are just individual one-off exercises. And then the gym looks like this. We have this whole gym theme going on. We're still in the process of releasing the July issue, but here we have the June issue. It always has these four categories. Warm-ups, those are the things you do when you very first sit down. Strength training. In June, we swapped, usually it's cardio first. Cardio is all of the things that Craig has asked you to do. Strength is we focus on one particular topic, and then we take a deep dive into that topic that month. And then cool down is reconciling reports and reconciling accounts and sending reports. Okay. So in June, we switched it up a little bit. We had the strength training first, but the entire issue was all dedicated to inventory. And there are two different styles of managing inventory. So you'll notice here, strength training, it says perpetual inventory, and then there is periodic inventory. Okay. So periodic inventory, let me just cover that, means that you are only counting the number of items in inventory periodically. So every so often, you whether it's on a monthly or quarterly basis, you go in, you do a manual check, and then you update the books to show the value of that inventory. Perpetual, on the other hand, means that every time you sell something or buy something, then it's kept track of in the books. And the great thing about having software is that it's much easier to do this. So if you have, if you're using inventory in QuickBooks Online, then it will automatically do that. Every time you buy it, every time you sell it, it will keep track of the value of all of that. And I'm going to go over that in just a minute. This is going to be the piece I've never done on one of these live streams, so we'll see how it works. Cross fingers. So anyway, the inventory is only available in QBO Plus level subscriptions and higher. But you can do periodic inventory for if your client has doesn't have that level subscription. Okay. All right. So this is the QBO Gym. So what I'm going to do today is talk just about kind of conceptually about inventory, and how QuickBooks Online manages inventory. And then I'm going to show you where to find the free exercises. Now, this is an advanced topic, but you don't need to be advanced, because I am going to walk you through everything. All right, so let me see if I can do this. It's the first time I've ever tried this, guys. So what I'm actually going to do is, so I'm going to go through one of the presentations that is inside the advanced level certification course. Okay, this is what I've never done before on the live stream. Usually we just walk through the exercises, but I'm going to walk through this presentation, and hopefully you can understand more how inventory works. All right, cross fingers. Let's see. Let's see if I can do this. Okay, I'm going to hit this. And then, do you see introduction to inventory? Yeah? Does it say introduction to inventory? Yep. Okay. All right. Excellent. So, so this is a freebie. So if you don't have the advanced course, then yay, then you can get one of our little presentations from the advanced course teaching you about inventory. Okay, so let's just talk about how QuickBooks Online handles inventory. Okay, and we are going to, for the purposes of our example, we are going to sell some t-shirts. Okay, so we have some t-shirts in inventory, and QuickBooks Online keeps track of two things. So the first thing it keeps track of is the quantity. That is the number of t-shirts. And we're just, you can just eyeball this and you can just see that there's 5 t-shirts right there, right? So QuickBooks Online is going to know that you have 5 t-shirts. But the other thing that it's going to keep track of is the value of those t-shirts. Okay, so the value, that's the money, that how much the t-shirts are worth. Now, when you have inventory, the value of your inventory is not how much you're going to sell them for. So maybe I sell these t-shirts for $20 a pop. Well, that doesn't mean that I have $100 worth of inventory. What we're tracking is how much we paid for those t-shirts. That's the value of inventory. Now, we're going to track the value of that inventory when we buy them. That's going to be tracked in an asset account. So as soon as we buy that inventory, then there's an account that's going to say, okay, however much we bought these for, that's how much is in that account. We are also going to track, however, when we sell them. Now, when we sell them, this is where it gets a little bit complicated, and you'll see why as we go through this. Okay. So when we sell them, we're tracking them in a different account, which is the cost of what we're selling. Okay, so let's walk through this. Okay, so remember, QuickBooks Online is tracking 2 things: the quantity, how much is in the inventory, and then number 2, the value of what is in the inventory. Okay, so you can just see we've got 5 purple t-shirts, right? Our quantity is 5. Well, how much did we buy them for? We bought them for $10 a piece. That's a pretty expensive t-shirt, but and it makes the numbers easy like when we do this. Okay. So if we bought them for $10 and we have 5 of them, then the value of that inventory is $50. So far, so good, right? Okay. Now we track that in an account called the inventory asset account. Okay. So it's inventory asset value. All right. So let's say we sell 2 of those t-shirts. Now QuickBooks Online has to keep track of what happened. Okay. So now we sold 2 t-shirts. So what's our quantity now? Well, you can just eyeball it, right? Quantity is 3 because we sold 2 t-shirts. And what's the inventory asset value? Well, those 2 t-shirts that we sold were each $20. So now there's only $30 left. You can either say it's $50 minus $20, or you can just look at it and say, there's 3 t-shirts and they're $10. And so the inventory asset value is $30. Okay. Now, remember that inventory asset value is added to when we buy things, okay? But we also are going to add to an account when we sell things, okay? And the account so how much was added to that account? $20. That's what we sold. We sold $20 worth of stuff. And so we have $20 that's going to be added to our account for selling, and the name of that is the cost of goods sold. Okay, so that's our account. It's also referred to as COGS. COGS, cost of goods sold. We sold 2 t-shirts. They were each worth $10. So the cost of goods sold was $20. Okay, notice that the $30 and the $20 equal the $50 that we had originally. Okay, so far, so good, right? Super simple. Well, now it's about to get a little bit more complicated. Okay, so we have these 3 t-shirts in inventory. Well, now we're going to buy some more t-shirts. Okay, we're going to buy 7 more t-shirts. So if we buy 7 more, we add 7 to the quantity. That's 10. Again, you can eyeball it. That's pretty easy. Okay. Well, what are we going to add to the inventory asset value? Well, it depends on what we paid for them, right? Well, in this case, the price went up. So now it's not just $10. Now they are $11. And so we're going to say, well, we've got 7 t-shirts that we bought for $11. So we're going to add $77 to our asset account, our inventory asset account. So right now, that we have $107 worth of inventory. Okay. So the question is, what happens to the COGS account? And the answer is right now, it depends, right? So remember when we buy something, that's added to the inventory asset account. But nothing is added to the cost of goods sold account, that COGS account, until we sell them. Okay, so it's not until we sell them that we add to that COGS account. And so that amount that we sell them for is going to depend on which of those t-shirts that we are selling. Are we selling the $10 t-shirts, or are we selling the $11 t-shirts? Okay. So to answer that question, you need to understand a concept called first in, first out. This is what QBO uses. It's also called FIFO. Okay. First in, first out. So when we sell them, we're going to sell that bottom level of inventory first. So if we sell 3 t-shirts, where's my little circle thing? There we go. If we sell 3 t-shirts, that's pretty easy. We're going to sell those $10 ones first. Okay. So the quantity goes down to 7. The what's left in the inventory asset is that we've got 7 t-shirts with that cost us $11. Okay, so that's our inventory asset value right now. And then we've got, what's the cost of goods sold? It's that 3 times 10 equals 30. And then that's pretty easy. Okay, so what if we sell though more than those 3? Well, let's say we sold 4. Now it's going to take 1 more t-shirt from that $11 pack. Okay, so now our quantity that's left is 6. Our inventory asset value, which is the 6 that are left times the 11 that we bought them for. Okay, and so now for COGS, it's going to take 3 times 10. Okay, so those first 3 t-shirts that we bought, those were $10 each. Okay, and then it's going to take the 1 from that was 11. So what's added to the cost of goods sold is $41. Okay, now why did I go through all of this? Number one, it's just in general, it's important for you to know. Okay. But for those of you who are taking the advanced level test, you do have to know this. You have to calculate, like you actually have to do math, and you have to actually figure this out for because for the advanced level test, they want to make sure that you know how to do that. So okay, how do I exit here? Dun, dun, dun. Okay, what are you seeing now? You're seeing this spreadsheet, right? Is that right, Joel? You're seeing this spreadsheet? Okay.
Looks like it's coming. Just give it a second.
Okay. Joel says it's coming.
There we go.
There we go. All right. So now, we have on the spreadsheet, we have the exercises that are specifically designed to calculate inventory value. That's one of the things that they want you to know for the test is, do you understand how FIFO works? Do you understand how QBO does? I mean, you can see how this is super complicated, and it's nice to have software to do it. Imagine back in the day, if you were doing perpetual inventory by hand manually every time, like that would be crazy. So that's why they have periodic inventory, because sometimes you don't want to do it. But when you have software, it will track it, every single time. So we have several different exercises, and these are kind of unusual in our entire suite of exercises. These are unusual because these are math-based and they're not QBO based. So I just wanted to show them to you really quick. Okay. So we go over here. By the way, you'll notice that some of the exercises have YouTube links so that you can actually watch me walking through the exercises. You'll notice that there's a lot that haven't been recorded, and I'm super excited. We just hired a new team member, Jen, who is her whole job is to record the exercise video links. So very soon we're going to have a video for every single exercise that we do, so you can actually watch somebody else going through it, which is super helpful, because sometimes you get lost in the exercise, and then you don't know you don't know where you got lost or whatever. So I'm super excited to have her on the team, and hopefully it's going to be really helpful for you guys. All right, so you're just going to go here and you're going to click this little link, and it will take you to the exercise. Here's the scenario. George has decided to start selling widgets. He found a supplier where he can get them for $5 each. He buys 10 and sells 4 of them for $10 each. What is the value of his inventory after the sale? Well, we just went through the whole exercise. We went through that whole presentation. You should be able to quickly know off the top of your head. He bought them for $5 each. Okay, so he buys 10, so he had $50. He sells 4 of them for $10 each. Okay, the sale price, what is the value of his inventory after the sale? Well, here's an important thing. It doesn't matter the price that he sold them for. if you're taking the test and they're and they ask you, you know, like this is a red herring. If they're throwing, excuse me, if they're throwing it in, it does not matter what he sells them for. It only matters what he bought them for. Okay, so he bought them $4, 4 of them for $5. So that's the cost of goods sold is 4 times $5 for 20. So I'm sorry, yeah, that's 20. So he should have $30 after the sale. Let's see if I'm right. So here's the solution. Okay. All right. So the amount he sold them for. So here's how to solve it. The amount he sold them for, $10, is irrelevant. That's what I just said. It affects the sales income, but does not affect the inventory asset value or COGS. The easiest way to keep track of FIFO is to create a table using the amount in inventory and the purchase price, then keep track of each sale. Okay, so here is our table. He bought 10, okay? The purchase price was $5. So this whole row represents the ones that were $5. And so there were 10 initially, then he sold 4. So now there's 6 left. So 6 times 5 is 30. Okay. And that's here the solution. He has 6 left in inventory. Okay. So the value of his inventory is now 30. Okay. So now we can go on to part 2. When George is excited about his new business, he decides to buy and sell more widgets. The vendor is having a sale, so he buys his next batch of 10 for only $4.50. Okay. So then he's got a sale here. So then we have another, so you can see first sale, second sale. So I had not planned to go over these. That's why I didn't send them to Joel in advance. I was just showing you like where they are. Okay, so this is important for you to do these 3 exercises right here. See them? Can you see me doing this? Okay. So this calculating inventory value, and it gets more and more complicated, but because by the end, when you're expert, like that's the level that you need to know for the certification test. Okay. So this is all from the advanced course. Those 3 are like math type exercises, and then the rest of them are actually working in QuickBooks Online, which is what we're going to do next. Okay, so as I mentioned, these are one-off exercises, just individually, and they are from the advanced course. Now, I really just planned on doing inventory because that was the focus of the gym. But then I was reminded as I was getting this all set up today that we actually have a special running for the advanced course. So the advanced course is 50% off for the month of July only. So if you had on your list of, you know, things that you wanted, you know, your goals, you wanted to get the advanced course, which maybe I'll just talk for a minute about how to know when you're ready for advanced, because that's probably the most common question that I get is like, how do I know when to get to go for advanced after I got my basic certification? So my own personal journey was I out of the gate, I wanted to know everything. Like I wanted to be the most prepared person when I first started wanting to be a learning how to be a bookkeeper. And so I said, okay, I'm going to get my advanced certification, and then I'm immediately going to get I'm going to get my basic certification, and then I'm going to immediately get my advanced certification. And so I pushed through. I went from beginning, I went to advanced, and then I started building my business. My very first client required a feature that I only knew about because of advanced, because I had gone through advanced. And she, like, that was like the primary thing. Like that was how I got that client, was because I knew about this feature, and that feature is not covered in basic. And so because of that experience, I was so glad that I had gone boom from basic to advanced. Okay. That was my journey personally. Intuit actually recommends that you wait. And a lot of the teachers and gurus recommend that you wait for a period of time, that you get familiar with QuickBooks, just the basic features. You get familiar with that, you work in that for a couple months, you get practice, whatever, and then you move on to advanced. Whatever's right for you, got to do what's right for you, right? So me personally, I was glad that I did it right away, but not everyone is me, I'm Joel will tell you, I'm a bit of a glutton for punishments. So, so, maybe if you really, really struggled with basic, then you can, you can wait, and that's fine. The next question that I get when we're having a sale is, if I get it now, do I have to do it now? And the answer is no. So you could take advantage of the sale now and then wait and do your, when you have more time, when the kids go back to school in September, and do it then. I mean, that's totally fine. Once you buy the course, you have the course forever. Now, the course does change based on the certification year. So come October 31st, that'll be the last day that you can take the current version of the course and the test. And then Intuit will release new material, and we will rebuild the course, but you'll have access to the new course. So it's fine. I mean, so it's fine. So anyway, all right, hopefully that answered. Those are the biggest questions that I usually get about advanced. But anyway, the purpose of today was not to pitch the advanced. It just happened to come up because this is the topic we're sharing, what I'm talking about. Okay. What I really wanted to talk about, because it's more, I don't want to say it's more valuable, but it's, I don't know, it's just a kind of different way of approach, is the gym. So because the gym, I mentioned those other exercises are just one-off, and they're based specifically on what you need to know for the certification. Whereas the gym is more about being a bookkeeper and actually like your day-to-day activity. And so in the June episode, or the June issue, everything is all about inventory, and you don't just get those little one-off exercises. It's like you're actually working with Craig and managing all of purchasing the inventory, what his mindset is. It starts, he's not sure whether he wants to do it for real, and so we're going to start with periodic, and then oh yeah, well, he really liked this, and so now we're going to do perpetual, and he sold some things, he buys some things, he has things that break, he has things that he donates. Like people return their inventory. Like, it's a much more comprehensive experience of sitting at. I mean, that's what the gym is. Every month you get a simulated experience of actually being a bookkeeper. And so in June, it's all focused on inventory, and then other months, in May, it was our focus was on journal entries and how you do that. July is still in progress, but July is all about locations. So your customer has locations, and your client, who's Craig, has different locations. It's managing inventory, or managing invoices. So anyway, it's a much more comprehensive experiential thing. Okay. All right. So there were 2 exercises that I wanted to go through today. And one of them is related to shrinkage, and that's the one. Now, if you are a member of the gym, then you'll find this in your gym in the June issue under strength training. So right here, it says inventory shrinkage. So that's how we handle that. And the only way to get there's only 2 ways to get the gym exercises. One is to be a member of the gym, which you can join for, you can get a 7-day free trial and, you know, just to check it out and access it and play around with it and see if you like it. And if you, Joel can go ahead and put that link now in there in the chat, so you can get that 7-day free trial. If you're watching the recording, then of course the link will be below. But the other way, so that's one way to get the exercises of the gym. The other is to be on these live streams, because the live streams are the only time that I give away these exercises for free. Okay. All right. So this is the one we are going to go through. It comes from strength training. We're going to talk about inventory shrinkage. Okay. So shrinkage is what happens when the value of the inventory goes down, but not because the things were sold. Okay, so we went through the whole presentation, and the inventory asset account, you know, every time you buy and sell something, that's going to change. But what happens, there's a couple of situations, and I just wanted to go through them. Okay, so Joel can put that in the chat if you haven't already. He's giving me the thumbs up. Okay. All right, so this is the strength training exercise. It does say, remember to use the same session of the sample company that you used for the previous exercise. That is, we're not going to need that for what I'm going to talk about today. I'm just going to talk through it. Okay. All right. So here is the scenario. Okay. At the end of the month, Craig mentions he's missing some of his keychains. Okay. So remember, normally the inventory asset account would go down if you sold something, that's fine. But here is a case where the keychains are missing. So he thinks some kids might have pocketed a few at the last market he went to. To make sure everything is accurate in his books, you ask him to count everything up so you can make an adjustment. This is good timing, since it's good practice to do a physical count like this at least every year to catch mistakes. Okay. Now, I talked previously about periodic inventory. You have to go in whatever the period is, every month, every quarter, to go in and do a physical count. You have to do that for periodic. With perpetual inventory, it's done all of the time, but it's still good to go in and do a manual check every so often, just to make sure, because who knows, maybe some wandered off, maybe something fell off the shelf and broke, maybe who knows what happened. Okay. So this is good timing, since it's good practice to do a physical count like this at least every year to catch mistakes. Think of inventory adjustments as reconciliations for your inventory count, much like bank reconciliations for checking accounts. Craig also wants to donate some items to a local Little League team as some cheap advertising. The team plans to raffle them off, so Craig has attached business cards and coupons to each. Okay, now we're going to talk about the donating is an entirely different animal, so we're going to talk about that separately. First, I just want to talk about inventory adjustments in QBO, and that right here is like this next section. Okay, QBO has made some reports available to help our clients check their inventory value. We'll start with those, then enter what Craig sends back to you to make sure everything is square. Okay. All right, so we are in the sample company. Now, hopefully, if you're on this call, you know how to, you have your QBOA account, you know how to access the sample company. If you're watching the recording, guess what? Links are below. It's all free, guys. You can get your free QBOA account. You can access this free sample company to practice and learn how to actually do this. Okay, so this is what Craig's, this is the sample company, and it has changed recently. Like, this whole interface changed, and the left navigation bar changed. That's why it says we have this message, customize your quick actions. And when I get back home and I'm in my studio, I'm going to create a video just about all of the new stuff that's available. Okay, so that's coming soon. All right, so here we are in the sample company, Craig's Landscape Design and Landscaping Service, or Craig's Design and Landscaping Services that is our fictitious business owner, okay? So we can make things easier for Craig by printing out a worksheet for him to use to count his inventory. From the left nav bar, click Reports, then using the search bar, begin typing Physical Inventory Worksheet and select it when it appears. Okay, so I'm going to go here to Reports. I'm going to search by report name. Just started typing Physical Inventory Worksheet and it popped up. So I can click it there. Oh, come on. Come on. And I can click it there. There we go. All right. So notice what, and I hate that I can't make this bigger for you guys, but you can see that really all it is printing out a list of all of the inventory products. Remember when you set up products and services that you have, you can set up I can't talk all of a sudden. You can set up an inventory product. You can set up a non-inventory product. So it's a physical thing, but you don't keep track of it. And services. And then the fourth one is a bundle. Those are the types of products and services you can set up. That's all covered in the basic course. So that's a pretty basic thing. Okay, so this is for those products that were set up as inventory products. This is what QBO thinks is currently on hand. Okay, so previously I showed you in this exercise, it said, make sure you do the previous exercise in the same session of the sample company. That's because in the gym, we actually imported a whole bunch of other products and services. You'll see that in just a second when we go through the exercise. Okay, so here's the quantity on hand. All you're going to do is print it. So here's your little print button. So you would print that, give it to Craig. So then he or his employee, whoever, is going to go back and do the actual physical inventory count. As a bookkeeper, you shouldn't be doing that. So if they ask you to do that, say no. That's not your job. All right, so okay, note that in a real life scenario, you would print or email this to your client. They would perform a physical count of what they have on hand and return the report to you with the completed physical count fields for you to enter into QBO. Okay, so I'm going to go to 2, and here is the oops. Oh, that's interesting. I didn't know that would happen. I guess maybe I should do that so you can see it better. Anyway, this is the physical inventory worksheet, and you'll notice that it's a little bit different than what you have in your sample company right now, because if you were doing this as part of the gym, you would have imported these additional retail products right here, bird bath, plant mug, that kind of stuff. That's all part of earlier exercises in the gym. All right, so he went back and he wrote on there the physical count of how many he has. So now we're going to go in and we're going to do, now you can enter his data for his inventory adjustment. Note that while we're focusing here on Craig's retail inventory, this is good practice for his landscaping items too. For now, we'll only update the retail items that we've been working on in this exercise. Okay, so again, that is, I'm assuming that you've done through all of this stuff already in the gym about the inventory. Okay. All right. But here's what I wanted to show you is step 2, we're going to click the plus new button and then select inventory quantity adjustment. I don't have a, okay. So this actually, oh no, I'm never mind. Sorry, I got confused for a sec. All right, so here we are. We're going to plus new, and then we're doing inventory quantity adjustment right here. Okay. All right, so in the exercise, so that's steps 3 and 4. Okay, so here again is the worksheet. Okay, and then what we would do is for the items that he marked, you're going to put in the product line. Now we haven't done the previous exercises. Okay, so we're just going to pick one of the other inventory products. Okay, so let's say I select fountain pump. Okay, so fountain pump, it says that there's 25 on hand. Okay, and if I say, oh, I actually went back there and I discovered, I counted them, and for some reason there's only 24. I don't know what happened to the one. Okay, then I can type 24 here, and then notice it says change in quantity. Now, here's the other thing I wanted to point out. Let's see if it's in the exercise. I think it is. Okay, let me just go back here. Yes, the second thing is the inventory adjustment account. Okay, so this field, let me show it to you real quick. Okay, this right here, inventory adjustment account, there is an account already set up that's called inventory shrinkage. Okay, why is this important? It's important because you have your inventory asset value account, and that account needs to keep track of the value of, like, the value of your inventory, right? So typically that's only, that account keeps track of your, it goes up when you buy inventory, it goes down when you sell inventory. Okay, and so you could keep track of that by your sales and expenses. Well, now we have something that's missing, like, I don't know, somebody stole it, or somebody, it fell behind the shelf and we didn't realize it or something. And so now we have to have a separate account that's going to track just those, like, oddball things. It's just going to track what happened. Okay, that's what the inventory shrinkage account is. Okay, and you can adjust this. You can pick a different account if you want, but this is just, it's a cost of goods sold account. So it's going to be tracked as cost of goods sold, but it's going to have this separate thing so that we know that this is like this extra, thing. It's not like a normal occurrence. Okay, so that is important for you to know, that inventory shrinkage account. Okay, so the exercise relies on the previous, stuff, which we're not going to do right now. I just wanted to point out those things. Okay, all right. Oops, and go back here, and then I'm going to hit save and close. So that inventory shrinkage account will be updated, and the quantity on hand will be updated. So now here we did it adjust. It looks like it adjusted this. Yep. Okay. All right. So that is one type of shrinkage. Now, in the exercise in the gym, something else happened, right? Is that he gave away inventory as a marketing opportunity. Now, we can use the same inventory quantity adjustment, but look what's going to happen. Let me go back to steps 3. I wanted to show you this right here. This inventory adjustment account, right? He is giving these to the, let's go back and read the scenario. He's donating these as a marketing opportunity. Remember, he's giving them to, like, the Little League. Let's go back to this scenario again. Okay. Also, Craig wants to donate some items to a local Little League team as some cheap advertising. Okay, the team's going to raffle them off, and Craig has attached business cards and coupons to each. Okay, so this is advertising. So when you get to the inventory quantity adjustment, look what we do. Right here, we put in advertising. Okay, so that is now that's going, that shrinkage part is not just like a one-off. It's not just, it's missing whatever. We know what happened to it, and what happened to it is we used it for advertising. Okay, that's one type of donation. The other type of donation is if you're donating to a charitable organization. Now, that is not, we don't cover that in the gym, but we do cover it in the advanced course. So you can access this exercise right here, recording a donation. And this one I did email to you guys, but I will also put it in the chat. Somebody asked, see, this is unusual for me because normally when I do these live streams, the chat, I can see the chat, I can see all the questions at once. Now with this, I have to actually open the chat and see what everyone's saying. So let me go back a little bit and see if there are questions. Can you share with us what was the feature? Oh, the feature that I needed for my very first client was projects. So she was a consultant, and she would have contracts with different. She had multiple contracts with different clients, with one client. And so it was really important for her to track her income and expenses for each contract, not just for each client. And so that was why we set up projects for that. Thanks for the question, Barb. Charlotte's opinion is to wait and get a good foundation. That's waiting for the advanced. Again, everybody's different. And so for some people, that is absolutely the right decision. All right, Johnny says 50% makes it how much right now? Oh, the advanced course. I think that it makes it like $249, I think. And then there's also, if that's still a struggle for you, there's a couple payment plans. You can pay like over 3 months, I think. All right, so let's talk about the other type of donations. And this is where we're going to wrap up today. Okay, so here is the link for the other type of donations. Okay, and I don't have it open, so I'm going to have to do it myself here. And there we go, record a donation. All right, does it have to be that big? That's kind of too big for me. Zoom out. One more time. Okay. All right. So this concept is covered in the advanced course about how to record a donation. In the gym, we talked about a different style of donation in which the donation was for the purposes of advertising. It wasn't for charitable giving. If it's for charitable giving, then you have to keep track of the organization that you donated the stuff to. We can't do that with an inventory quantity adjustment. With an inventory quantity adjustment, you're just saying how much money was donated, right? How much of the inventory was donated. We're not saying like who it was for. And so because for charitable donations, it's a little bit different. And so this one, and this is one of our free exercises, everybody can do it, okay? Although I recommend that, maybe you do some of the other inventory ones to get your feet wet. All right, so here's the scenario. Craig has decided to donate a rock fountain to Duke's basketball camp. How would you record this? Okay. So what we're going to do in this case is we are going to create a $0 sales receipt. We do that by clicking plus new in the upper left-hand corner. And then we're going to say that it is the sale of one rock fountain to Duke's basketball camp. Let me close that. I don't need that anymore. This is okay. So I'm hitting plus new and a $0. So I'm going sales receipt. This is Duke's basketball camp. Okay. All right, steps 2 through 4. So now what we're going to do is we're going to click the black save button. Normally, oh, I forgot to say, what was it? A fountain? A rock fountain. Okay, so here's the rock fountain normally that we would say, and we're going to say, let's see, record a donation. Doop, Okay, and we're going to say that it's $0. So normally it would be $275 plus tax. We're going to change it so that it is $0. Okay. So what this does is this says we sold something to Duke's basketball camp. And what it will do is we'll take, because this rock fountain is an inventory product, it will take this quantity, it will subtract from our inventory 1, and it will also subtract from the inventory asset value account, like we talked about, the value of that 1. Okay. So, and we know that it's going to Duke's basketball account. Now, normally we'd be done here, right? We would just hit save and close. Hopefully, if you guys have been around for a while, you know how to do a sales receipt. It's pretty simple. This time, however, we're not going to do that. We're going to hit the black save button. And there's a very important reason why we're doing this. And it has to do with what I talked about in the beginning, in the very beginning, if you were here in the beginning. Okay. So we're going to click the black save button. On the black bottom bar, we're going to click more, and then we're going to click transaction journal. Okay. This, nope, not that one. So I lose my, okay. So I'm going to click save. I'm going to click more. And if you don't know about the transaction journal, this is for every transaction. It shows you the ins and outs, all the debits and credits and everything that has happened under the covers, under the hood. Okay, so we're going to click transaction journal. Oh, this is lovely. Oh my gosh. Okay, Joel, make a note that we need to change the picture, because they have totally changed what the transaction journal report looks like. Oh my gosh. Okay, so if you look at the picture, this is what it's supposed to, this is what it used to look like. Okay, and good times, this is what it looks like now. Totally different. Okay, so now I have to relearn this new little thing here. Okay, and then we'll make a note. This is why I have Joel here, is he'll make a note for us to change the pictures in the exercises to match what you're actually seeing here. Okay, so, but basically it's the same. This is what are the debits and credits, and you'll notice what the cost of goods sold is. So why is it that we don't just know what the cost of goods sold is? Why don't we just know that? I don't know, but I'm not asking you to put it in the chat. We're like running out of time. I'll just tell you the answer. Because the cost of goods sold depends on FIFO. Remember, it all comes full circle, guys. It all comes full circle. So we don't know what the cost of it was when Craig bought it in the first place. You know, maybe it was a $10 t-shirt, maybe it was an $11 t-shirt, maybe it was a $100 fountain, maybe it was a $125 fountain. QBO keeps track of that. And so QBO now knows how much the cost of that was. Why is it important for us to know the cost? Because that is our charitable donation amount. It's the amount that it cost us. That's how much we are donating to Duke's basketball camp. Okay, so if I look on here, I can see right here the cost of goods sold, $125. So $125 is how much we are donating to Duke's basketball camp. Okay. All right. There's one more step that we have to do, and that is we're going to create a journal entry to say that we donated this amount. Okay. So step 4 right here, note that the amount debited the cost of goods sold account is $125. This is the amount you will need to credit in your journal entry. Okay. So, we're going to create a journal entry, and we're going to say that we have made a charitable donation, and the amount is going to be 125. We only knew it was 125 because we did that transaction journal account, And we can't do that until we have saved the sales receipt, because that's when QBO is going to do that calculation of the first in, first out stuff. Okay, so here we go. And this is going to be it. I know we're a little bit over time, but it's all good stuff. Okay, so we're going to click Accountant Tools and select Journal Entries. Okay, so I'm going to go to Accountant Tools. I'm going to select Journal Entries. Your clients can create journal entries too. This is a thing people get confused about. They think only accountant users can create journal entries, but you actually, anybody can create a journal entry. Well, not anybody, but your clients can too. It's not just an accountant thing. Okay, so we're going to credit the cost of goods sold, $125, indicating the reason in the description and Duke's basketball camp in the customer field. Okay, so we're going to go to cost of goods sold. With my keyboard, cost of goods sold. Okay, $125. Charitable donation. Duke's basketball camp. Okay, so what this does is it takes it out of the cost of goods sold account and puts it into the charitable, oops, not that one, charitable donation. Okay, debit a donations expense account by first creating plus new in the account column. Oh, we have to create a new account. This doesn't exist already. Okay, so we're going to go to, here's a little trick. Instead of hitting add new right here, we're going to say charitable contributions. And then it will already create the name of that. So I'm going to hit add new. Oh, I'm going to close this because we don't need that anymore. It's getting confusing. Okay. All right. In the pop-up that appears, create an expense account with the detail type charitable contributions. Okay. So we're going to create an expense account. Expense account. Charitable contributions. Okay. And click the green save and close button. Save and close. Okay. You'll notice that it automatically assumed that we're balancing credits and debits. It automatically copied the description. I didn't type that again. Okay. And here we go. There's that. Okay. Enter Duke's basketball camp in the field. Duke's basketball camp. And then click save and close. Save and close. And so what we're doing is we're saying we needed to create the sales receipt first so that we could capture that it was Duke's basketball camp, and so that we would know how much that cost of goods sold was for that item. And now we're creating the journal entry that's going to say that's how much we donated. Okay, and that's save and close. And that's it, guys. All right. Oh, you can switch to classic view at the top. Yes, thankfully. Yes, thanks. Thank you. I could have done that for sure. All right, let's see. Did I stop screen sharing? Okay. So now I stopped screen sharing. So now let me go through the, did you purposefully leave the tax button checked? I know this is a tax question. Oh, I don't remember. I didn't do it on purpose. I don't know what I did. You're right. I could have switched to classic view. I'm not screen sharing anymore, but yeah, there it is. Thank you, Teresa. Okay, Glenn. Advanced course and payroll course are well worth the expense. I passed both advanced and payroll due to Margie and her team's work, but I also had 2 years of QBO experience before taking the exams. I had no experience. So, so don't let it scare you away that you need experience. I mean, but I mean, I had been using Intuit products. I was a big user of QuickBooks for many, many years. And I've always been like really into numbers and tracking, and I've always been, good at math and all that. I mean, so I did have some advantages, even though I didn't have the actual QuickBooks experience. I don't know. It's such a tough question. You really have to know it for yourself. So anyway, all right. I think that is it, guys. I think that hopefully I answered all of your questions. We're sorry that we're a little bit over, but I think it worked pretty well. I think Zoom was a pretty good solution for traveling. Maybe it'll be a good solution while we're home, when I get home. I don't know. And I don't know where I will be a week from today, somewhere in the middle of the country. So so hopefully it works as well. I am so grateful for you guys. Thanks for sticking on with us. And I will see you next time from somewhere. Have a great weekend. Bye-bye.